Most share markets around the world gave up some of their recent gains last week, with most of the global markets down between 1 and 2% for the week. The local NZX 50 was down 0.7%, and it was currency markets where we saw even stronger moves. The Kiwi dollar was up very strongly against most other currencies, largely on the back of the Reserve Bank of New Zealand choosing to leave the OCR unchanged last week. This caught a few people by surprise because odds were roughly evenly split between a cut or them holding fire. We also saw the Australian inflation data come in a little weaker than expected, and that's raised the prospect of RBA rate cuts in the short term, and we saw the US dollar hit the lowest levels in more than a year. That saw the Kiwi dollar rise back to almost 92 Australian cents and almost 70 US cents. The Reserve Bank of Australia meeting on Tuesday afternoon is shaping up as one of the most interesting events of the week. This time last week, the market only saw a very small chance of the RBA cutting interest rates from the current 2%, but now, having seen a very weak inflation report last week, those odds have increased to more than 50%. It'll be a very interesting day because we also get the Australian budget later that evening, and that could have some influence on whether the RBA wants to take any action, and this could all see some more movement in the Australian dollar. This is important for New Zealand because Australia is still one of our largest trading partners, so any big moves in that New Zealand dollar Australian dollar exchange rate have a big impact on many of our exporters. Wednesday's shaping up as the most important day on the local economic front, and there are two important pieces of data that are due out. First up, we'll have the latest dairy auction results. Now, the last two auctions have seen a small uplift in prices, and that will continue this week in all likelihood. Prices are up about 6% over the last month. However, the bad news is that they're still well below where they were a year ago and below where they began the year. We'll also get the March quarter employment report, and unemployment is expected to rise slightly from 5.3 to about 5.5%. This isn't all bad though. Part of the reason is a very strong migration inflow that continues and a rising participation rate.